If you are currently struggling with your trading, your entries, and your exits, there is a likely chance that you are not properly planning your levels and looking at the chart, analyzing the chart before market opens. And so I'm going to give you guys a little sneak peek of what I posted in the group this morning, and then what I was looking for and how I gained confidence enough to enter this trade that we took. It netted me about 30%, but I'm not going to really make this about me today. I'm actually going to make this more about members, because I saw two different focal points on this trade that I posted, and one side of that being the people who made about 30%, the other side of that being people who maybe got in a little bit too late, which is okay, but they were too scared to wait for profit, so they only took about 7%. And there's a big difference between these two types of traders. One has more confidence in their plan, their entries are more precise, this comes with experience. The second part is maybe from a person who is dealing with some recent losses, their confidence is a little bit lower, but they're also being way more hesitant when it comes to their entries, which is okay. But then you've got to zoom out and realize the bigger picture, because if you're being very hesitant with your entries and safe with your entries, your target needs to be a little bit larger to make sense for that trade to be worth it. This also plays into, like I said though, the topic of this being if you are a struggling trader. So maybe you are the other person we talked about, where you feel like you're not getting the best entries and exits. You feel maybe a little bit too emotionally tied to your trades. So if it starts to slow down at all, you're completely out of that trade too soon, you're leaving money on the table, and you're not letting it work in your favor. Again, this can all go back to lack of confidence, which can also go to your lack of ability to read the chart. What are you seeing to make you want to enter that trade? So that is why I'm a big fan of understanding how to identify trades for yourself and not just blindly following somebody. So let's just look at what happened on Oxy this morning, and we'll also look at futures because I traded both, so Oxy and CL. So we'll review both of these charts and then just kind of my thought process behind this trade. We'll move back over to Discord here and you can see my comments, and let's start with Oxy here. So I have been doing much better trading oil for the past 2 weeks, so I continued that today. I was looking for a few things, so let's just dive into the chart here. This gray box, I'll explain what that is, but I was looking for buyers to hold here. So I wanted us to dip into this gray box. I wanted to find higher support in buyers in order to curl back up to micro range, which is just a fib strategy I've created, and then find buyers here to continue larger target to 59.98, which is next fib to the upside. So with that being said, I also had a downside plan. That's really important, right? So if we're not holding higher support, if we open up and we're very weak in this gray box, where are we headed to next? So it's always key to have both sides of the trade planned out. That is the first thing I'll say. Second thing I will say is, what are you doing to give yourself an edge? So all of this pre-planning and pre-market, the fib strategies I've created, understanding how to properly read a chart, understanding where buyers are, where sellers might be, and supply and demand, support and resistance, understanding all of those moving pieces will help you better understand how to read a chart, which in return will help you have more confidence with your trades and gain better entries and exits. So with this chart, let's go see what happened. So that was pre-market what I posted, and this is what happened today. So we dipped down into my gray box. We indeed found buyers, formed higher support. So my entries were right in here, higher support here to then move into micro range, which was right here. Now, a lot of people who were late to enter on this trade were not entering till about right here. So this green candle, which would have gotten you maybe like a 7-8% return if you were looking to exit at top of micro range, because that's just this little tiny move. So that's the first thing I want to highlight, is if you feel like you're always late getting in and you're maybe always getting stopped out, or you're not achieving those big 20 to 30% wins. I say big because I think, once you develop a plan and have size, 20 to 30% is great. So let's say that you're just struggling to get past 10%. Maybe you're only securing like 7% on average. Is it because you are not realizing that you are in fact late to the trade? And so if that does sound like you, let's pick apart a few different things, because I want to highlight that the people who waited to get in right here, so let's say they got in, right in this area. just based off my strategy, forming higher support into micro range. That was their reason for entry. Now, if your reason for entry is all the way up here, and my reason for entry was all the way down here, you can see you're 50% through that move if you were targeting, let's say, the gap fill in pre-market. Let's say that you weren't using this strategy at all and you were just looking left and saying, okay, if you see where my cursor is, that's exactly where we caught resistance, right? And so it can be as simple as understanding pre-market range. So where did we start to drop off in pre-market? Was around 59.40, and so that gap being filled could have been a target of yours. So if that was the target, let's actually switch over to, I'll draw a red line. So if this was your target, right in here, was filling this gap in pre-market after we dipped down and found buyers right here in this gray box, formed higher lows, great move to the upside. And then you knew that your target was this pre-market gap, which was right in here. This is a very tiny move. You can't expect anything more than 10% off of a move this small. I mean, that is 2 5-minute candles. So that's more of a scalping point of view. And so if you're scalping, then you need to be okay with these small percent gains, because most likely you're trading on a 1 minute, maybe 3 minute time frame, 5 minute not so much when it comes to scalping. But if you're looking at it from a larger perspective point of view, and you're saying, okay, I know that we will probably catch some resistance here at this pre-market gap, but I'm going to leave a second area to scale in as long as we continue trend to the upside. Now, measuring trend to the upside can be, done in various different ways. But let's just say that you were using a basic trend line, which is a favorite of mine. So let's just draw a basic trend line. Look where we caught support. So yes, we caught support in micro range and formed higher support over, which would have been a great sign for my strategy. But you could have just been using something as simple as a basic trend line. So this basic trend line, as long as we are holding, meaning as long as we are making higher lows, moving to the upside, then we are in an uptrend and you still have potential to be scaling into a larger position on pullbacks as long as these higher lows are made, as long as we are still in that uptrend respecting this trend line. So this pullback right here, consolidation, and then boom, we bounced right up right here. This could have been an opportunity to scale in. So let's say that you're just doing the one contract method. Let's say you had one contract right here, and then we moved up, caught resistance, and you were waiting to add a second contract. Keep in mind your target would most likely be, for me personally, it would be the next fib to the upside, which is near 60. But again, let's assume that you are not a fib trader, and let's look around this area. So yesterday we played this one as well. We bounced up and we caught some resistance near 60.26. We also had previous support around 59.67. Since this area was hit multiple times, I would say this is a good one to target on the upside, which is around 59.67. So that would be my target. So if I scaled in on this pullback, I would be looking for a larger move to the upside. So now we've got more ground that we can cover. So if we are adding on in this range right here, let me move this, and I'm assuming you guys are a little bit more visual like I am. Let's say that you were adding, so this was your first place to add right here, and this was your second place to add right there. So we have got this range was your buy zone, and then this range was your sell zone. So what I typically have my members do when they're just starting out is try to identify visually on the chart by drawing boxes. Okay, is this box bigger than this box? Because you're trying to figure out your risk versus reward ratio. Now, me personally, there's no way I would have added size way up here. This is obviously why I was adding down here. Based off of my own strategy and risk tolerance, I was more comfortable adding here. You can see it was also where we caught pre-market support on this move down. So this one was a really very A+ confident entry for me. But let's say that you missed that move and you were trying to scale in, a little bit slower. You're not going to go heavy in size because you know that your 3-2-1 risk versus reward ratio is not the best, since we are already filling this gap from pre-market. You're no longer buying at a discount. But that does not mean that you can't still catch some of the uptrend, and you are feeling like you're late to enter. Well, give yourself some room to scale in. Now, I'm typically not a huge fan of doing that on options, so just make sure that you're not trading any type of short-term expiration on options when you're scaling in. but always have a plan. So if your plan is as long as we held trend, which you can see we did right here, then your risk would no longer be this big gray box. At that point, if you're adding up here, your risk then becomes, because this is when you scaled in, your risk then becomes that tiny, your gain this big. And so you also get the advantage of having the lower point entry here, so your average would probably be closer into here. We're just using the stock for reference. We could actually go chart this out on an option contract. That might be a little bit more helpful. All right, let's go to the trade tab. We've got some higher volume on the 60s, so let's go chart these out. Okay, so we're going to use the 60s, even though I was trading the 59s. A lot of people in my group that did have that issue, right? So they were only seeing those 7% small gains, were trading the 60s. Those were a little bit further out of the money, but that's not the end of the world. They did have higher volume. It just means they're going to be a little bit slower to grind up. They hit a low of 15 and they've hit a high of 40 so far. So let's go back to what I said. So let's mimic what they did where they felt like they had, you know, a late entry on this trade, and then we'll go back to look at what I did, and then we'll kind of find, you know, like I said, a happy medium for those people who are trying to be more cautious with their entries, but they also feel like they're struggling with being late to the game or late to the party and just feeling like they're always a couple steps behind other people. Okay, so what I mentioned is most of them added right in here because we were forming higher support over micro range, which you can see was happening around 1010. So at 1010, we saw 26 to 27 was probably an average entry. So let's just say that you got a 27 entry on these contracts. Now, the next thing that we talked about is you understood that once we filled the pre-market gap, you were just going to wait to see if we can continue this trend to the upside and scale in another contract. So if you scaled in another contract, that would have been most likely right at around 11 o'clock, which would have meant that your entry on these would have been around 32. So let's just do the calculator real quick, and let's do 27 plus 32 equals 59 divided by 2. So your average would have been 29.50. So let's just round up and say your average was 30. Okay. Now your target, like we talked about, could have been this next red line to the upside, which is around 59.70. So you've got a 30 contract average. Your risk level now would be if trend broke. So that means if trend broke, you're risking, I mean, at this point, I wouldn't risk your profits. Just me personally, I'd be moving the stop up. You can see we have formed higher support over where we did gap down in pre-market. So that's a good, healthy, bullish sign. So I mean, me personally, I wouldn't let my profits go at this point. You're up 33% because a $30 contract value, which has now gone to $40, is a 33% gain. That's a fantastic gain. That gets you from that 7% entry box that you feel like you're stuck at, always feeling like you've got late entries, always feeling like you can't grab the meat of the move, to that 30%, which is a really nice chunk of profits if you can get consistency enough to size up. So, and that's typically what I try to shoot for, is 20 to 30%. Where I was able to achieve that from right here, I didn't even hold this whole move. I've actually been out for a while now. But for the person who feels like they want to take it slower, they want to catch the bigger move of the trend, that's where that scaling in, as long as you've got a plan. I'm not talking about dollar cost averaging against a trend. I'm not talking about, you know, buying short-term expiration and just keep averaging down. No. We're talking about one contract at a time and practicing trading the larger trend. So where a lot of them entered here, exited here, or maybe in here for like a 7-8% gain, the flip side of that, as long as we are holding trend to the upside, this dip and this consolidation, which was just trying to form higher support, we are still very bullish, could have been another opportunity to add a contract or two. And now, looking left, zooming out, larger target, we are now nearing old resistance that could possibly, or excuse me, old support that now could possibly become new resistance. And this would be a great upside target for that larger move to the upside. So that's just, I know I say quick tip, I feel like a little bit longer. I know that was probably a lot to digest, but just to summarize what we went over here, if you are not quick enough to scalp, meaning you feel like you're not confident in your abilities enough to, I did not mean to do that, be getting, entries down here, or you're feeling like you're always lagging the move, then try zooming out and understanding how can you give yourself more breathing room to let this really play out in your favor. So if you're typically adding 3 to 5 contracts, maybe allow yourself to step back and scale in the move at maybe 1 to 2 to 3 contracts as we make higher lows if you are bullish, or lower highs if you are bearish. And then allow your stop to be a little bit looser, right? So as your dollar cost averaging up, meaning trend is moving up, so you added here. If you added here, personally, my stop would have been somewhere right in here, because this would have needed to hold as higher support, this range right here. So stop somewhere in here. Now, if you're adding all the way up here, there's no way I would have done a low of day risk level. That's just way too far. Me personally, adding right in here, that would have been a good low of day risk level. But you always want to think good risk versus reward ratio, and you're moving your risk level up as you are dollar cost averaging. So if you added here and you're adding again here, your risk does not need to still stay down here, because trend will break. You're just making sure that you're following underneath this trend line if you're using something very basic like a trend line, right? Now, for me personally, if I would have been doing this method versus what I did, I would have probably been adding size, because this would have been a very key important part for trend to continue up, because this was the third hit, 1, 2, 3. My stop would have been right in here, if not right here, right underneath this base that formed. And I actually don't know if we'll have time to go over CL. We can review it very quickly. This is just the futures version of oil that I was trading. I mean, what I was looking for was, I like to play them both together, so do options on Oxy and then futures on CL. And I was playing these higher lows forming right here off of micro range, and then I was risking underneath, like right in 70-30. Once I sized in, because I added, once we were making higher lows over my key level of 70.63, I was targeting 72. Let me prove to you guys that I'm not just making this up. Going back to what was posted before market opened at 8.25, I was looking for support to hold here. Micro range. If we failed, I was looking for next level down. We held, formed higher lows. My first target was 71.95, just basically 72. And then you can see we actually are over that right now. So that worked out perfectly. I also took profits just because I typically am not on the screens for more than 2 hours a day. And so it was just time for me to get off. And I was completely happy with everything that I did this morning. So I hope this is helpful. Just a reminder that if you are struggling, one more time, if you feel like the scalping is just not your thing, the 1 minute's not your thing, then give yourself the flexibility and room to take advantage of bigger picture trades. And that can look like scaling in, scaling out, but I would recommend going back to one contract at a time. So if you are looking to scale in on a trend, you're doing one contract, you're not, sizing in. Anytime you're trying to do something a little bit different, you really want to make sure you're just going back to one contract. So that way you give yourself room for error. It might not be your thing, or it might be your thing. So I know people who are very successful just using basic trend lines. It works for them. I mean, sometimes I do, but I like to combine it with my FIB strategy. And now you can see, as we move this trend line up here, we are now breaking trend. So just off that basic point of view, I don't know why this won't let me do this. We are now breaking trend after hitting near 59.60. So I said 59.67, 7 cents off. But then you would stop out right here once trend broke. And you can also see, looking left, that was a key important level in pre-market, because that was also where we started to catch resistance in pre-market. So if we lost this area, then there was a good chance we were going to come back down. So then exiting right here, you could have locked in about 30% off of this nice trend day on oil. And that is a wrap for today's free lesson for you guys on things that I just hope can provide you value if you are maybe a struggling trader or you're just getting to the swing of things. I do want to highlight, I have a ton of free content on my YouTube channel. Make sure you take advantage of that. I have things for people who are brand new at a 3rd grade level all the way to advanced live day trading and scalping. So it's something for everybody. But I also want to mention, I do have a lot of people ask me, how can I work more in depth with you? Do you do any private lessons? Do you do any trainings? And so the way to work with me further would be my membership, which will have more details down below. It will be in the master link, the second one down. And so it includes community, an 8-week A through Z program beginner to advanced, wherever you are, you can jump in. My advanced strategies, fib strategies. It also includes Discord community where I review my daily trades. So the one that I just showed you, I'll go into way more detail when it comes to the community. So pre-market plans, all that good stuff, step-by-step process on how I do things. So if you want more help, everything, like I said, is included in the membership as of right now. And if spots are still open, the link will be down below, second one down. If you want a free day trading seminar on how to day trade options with a small account, make sure to check the first link. And that's about it. I hope to see you guys back next week, and thank you so much for watching.